Hi, welcome to another video tutorial on the USDJPY. And in this video, I will be taking you through my thought process on what my expectation is going to be like on this pair for this week. So before I go into the details, it's important I state here that this is going to be a follow-up video to my previous analysis, where we were able to take advantage of some trading opportunities here, and this was published I think 2 weeks ago, and I did a follow-up on this publication, as you can see here, as we took advantage of those trading opportunities that the market presented us. So here is the daily commentaries on how we took advantage of that opportunity till the end of last week trading session. So if you want to have a look into what our expectations were prior to this video, well, I will be dropping the link to that video in the comment section of this video for reference purposes. So let's dive back into the daily time frame of the USDJPY, and let's see what is going on in the market right now. And here on the daily time frame, the first thing we observed here is that price action has been on a long-term bullish momentum, as you can see here. And as a result of this, I was able to connect the series of higher lows here to give us the resultant bullish trend line that you can see on your screen right now. So, well, if we zoom into the current structure here, that is between the month of June and now, you can see that we had a key level at the $135 level, which was serving as a neckline of a reversal pattern we identified here in the month of August. So we saw the reversal pattern here, which came in the form of a double bottom structure. So we saw the second touch here before the breakout of the structure happened in the month of August, and since then price climbed to as far as the 152 Japanese yen level. And from a technical standpoint, whenever we have a breakout of a neckline like this, we expect that at one point in time price is likely going to come back, do a retest of structure to incite another wave of bullish momentum. But in this case, this did not happen, as we saw that since price broke out of that structure in the month of August, price is yet to come back, do a retest of that key level at the 135 Japanese yen area. Now, fast forward into the month of September, we saw how the 145 Japanese yen level was holding selling pressure at one point in time before we witnessed the final breakout of the structure during the first week of the month of October, bringing price to this level. And during the early days of this week, we saw a final breakdown of the 145 Japanese yen level as the dollar continued to struggle against the USD JPY. And in the last couple of weeks now, we saw that price came back into the 138 Japanese yen level. And since price tested that level, we have been witnessing a consolidation phase right within the 142.5 and the 138 area to emphasize the indecision that is in this market right now. Now, with this indecision here, it's a clue that participants in this market still don't know where price will be going to in the coming week. So we don't know if price is going to go to the upside, or are we going to be having a breakdown of that structure to push price further to the downside. And if you look at how important this consolidation phase is, you will see that it shares a confluence with that bullish trend line that has been holding price action since the beginning of the week. So this is more or less an area we need to focus on right now. Let's really understand what is going on here before we can make an informed decision on this one. So before I go into the details on this pair, let's quickly go through the economic calendar, as there are series of macroeconomic events that will be serving as a catalyst for price movement for this week. Now, if we go into the economic calendar and look at what we are going to be seeing next week, hold on a second, let me pull that out for us so that we can see. So we have 28th to the 2nd of December. So we have the situation here. Now, for the USDJPY, we are going to be looking at those macroeconomic events that will be affecting the USDJPY and the Japanese yen. And if we look at what we have here on Wednesday, we can see we have the ADP employment change, we have the GDP for quarter three, then the Fed chairman is going to speak on that day too as well. And then if we go to Thursday, we can see the Bank of Japan's governor is also going to have a speech. This is also a very high impact event as well. And then on Friday, we have the almighty non-farm payroll. So obviously, participants in this market will be definitely looking forward to this event to decide if we are going to be buying or selling this pair for this week. And this anticipation will be reflected on the chart as price action. So we want to see how price action is going to what price action is going to evolve into, and we shall be using the structure to determine what next our line of action will be. So now back to the daily time frame here. There are two possible scenarios that I will be looking forward to at this point, considering the consolidation phase we have here, right around that key zone, which is around the bullish trend line that has been holding bullish momentum since the beginning of this year. So the first scenario that we might be looking forward to is a situation where the 138 Japanese yen level will be serving as a demand zone that will push price to the upside. So what we are going to be expecting from a technical standpoint is that following this impulsive move to the downside, and as you can see here in the last 2 weeks, we have been witnessing buying pressure from that level. Price came back into the 142.500. Price came back again the second time, and it could probably evolve into a reversal pattern in the form of a double bottom structure, break out of the neckline area, the 142.500, to incite another wave of bullish momentum. So that is one possibility that I might be looking forward to for this week. Then the other scenario here is if price breaks down the 138 Japanese yen level, a level which has been holding buying pressure in the last 2 weeks. So if we cite a breakdown of that structure in such a way that we might be having an engulfing candle, breaking down that structure, then I want to be seeing this as a bearish signal where price action takes out all the buy position here, hereby transitioning the structure into a bearish rectangular pattern, which is more or less a trend continuation pattern. So if a breakout happens, a retest of structure might likely send price back into the 135 Japanese yen level before another bullish momentum happens, or we could have a breakdown of the 135 retest of structure to further send price crashing to the downside. So these are the scenarios that I will be looking forward to as we head into the new week. But before I close this video, let's quickly look at what is happening on the lower time frame around this area. Let's have a peep into what our expectation could be like for this week. So in order to do this, I will be scaling down to the let's say the 2 hours time frame. So on the 2 hours time frame, what do we have here? So if we look at what has been happening since last week, so we have a simple structure here. As you can see, price has been on a bearish momentum, at least in the last 2 weeks here. And as a result of this, I was able to connect the series of lower highs here to give us that resultant bearish trend line before we saw price cut within the channel around the $142.500 level and the 138.00 Japanese yen area. So like I said on the daily time frame, we are looking for two options here. That is the structure here evolved into a trend continuation pattern, which might lead to the breakdown of the 138 Japanese yen level, retest of structure to same price going further to the downside, or we could be seeing price breaking out of the 142.500 level, as you can see here, which also shares a confluence with the bearish trend line. Very, very important area. After which a retest of structure could incite another wave of bullish momentum. So are we going to wait for price to break out of the 142.500 area to buy? If that was the case, well, I was able to identify a structure right here around the 139.600 area. After looking at this impulsive move that started last week, we saw this bearish momentum. We saw the rejection of the 138. Price came into the 139 area. So if price does not break below this previous low, then if a breakout of the 139.600 happens, then I want to be joining that rally to the upside, where I want to be seeing our price action will relate to the 142.500 area to decide if we are going to be selling one more time, that is price selling pressure right below this level to the downside, or if a breakout of that structure happens, then a retest of structure should be giving me another opportunity to add more position to this trade. So these are my views here on the USDJPY, but the rest assured that I will be jumping in the comment section of this video on my TradingView platform to give you an update of what my expectation would be like after monitoring how participants in this market will be relating to the current structure around this level. I hope this video has been of immense help in making your own individual decision on the USDJPY for this week. And if it did, kindly support this project by clicking the like button. Don't forget to follow me on my TradingView platform at Dark Sherry so that you don't miss out on the regular updates I normally share in the comment section of every video. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday as we get ourselves prepared for the new week. Do have a wonderful evening, and bye bye.